Hi everybody, welcome to another update on the stock screener. Lately I get a lot of questions about Cerrado gold, not sure why, but let's once and for all look at it and see what the upside is, okay? So, long-term chart, it doesn't look that great, it's down a lot, actually down 90% probably, and now maybe it's a buy at $23 million market cap. So how do we do this? Easy, just look at the balance sheet. This is the balance sheet, well, the latest that I got. And what do we need to know about this? Look at the current assets. So current assets, okay, I will just add all of those, 89 million US dollars. And then minus total liabilities. Minus total liabilities, but some of them are not applicable. This is applicable, this is applicable, that is applicable. Yeah, promissory notes. This is also applicable. Provisions, that's for the when the mine closes. Yeah, that's also applicable because someone needs to pay it. Promissory notes is applicable. So a lot is applicable except stream obligation, of course, because this is a royalty that's included in the cost. So this is not applicable. Long-term debt is applicable. MDC is not applicable because they are selling the Monte do Carmo, so that's not applicable. And yeah, deferred tax I always add because that will be coming in the net income, they need to pay it. Okay, so that's how you do it. You calculate the enterprise value based on the current assets minus total liabilities, which are applicable or not applicable. So I did that here. This is the current assets. This is the total liabilities, and these are the things that are not applicable. The royalty and the Monte do Carmo is not applicable. And this is the market cap. Okay, so the enterprise value that I get is 110 US dollars. So first thing you would think 23 million is very cheap. No, it's not very cheap. It's actually 110 million US dollars enterprise value. So actually it's not that cheap as you would think. But they do get some payments later on, 15 million, 30 million, and then 10 million and 5 million. Those are payments over the course of the years for selling Monte do Carmo to Hochschild Mining. Here I have added some of the interest payments that they probably need to do because they have debt. I don't know how fast they will pay it off. Depends on the gold price, of course. So this is just an estimate. SG&A, important, is not included in the all-in sustaining cost, so we need to add it. CapEx are just, I think they will need to drill something or do even production drilling. So I added 10 million. These are just estimates. It could be higher, it could be lower. They have a PEA, AISC about 1,150, 55,000 for 4.5 years, I thought. Important, all-in sustaining cost is just an estimate. It could be higher, it could be lower. So take that into account. It could be maybe 1,300 if they don't perform. If the grade is higher or lower, it could have an effect on the all-in sustaining cost. Production could also be lower or higher. So that's very important to know because that will change the NPV of this project. So this is only a small mine, 5 years mine life, less than 5 years. So they need to be able to repay all of that debt. And that debt is about 90 million. 90 million in debts that they need to repay. They get some of the payments here, but they also need to earn some money from that mine. If they cannot pay that debt, then they go bankrupt. It's as simple as that. So this is a balancing act to me. For me, this is a balancing act. Now the gold price has gone up, so that means it's looking much better now because gold price is up, so there's more upside now. But gold price was at 2,300 lately, a few months ago, and you can see that if gold is 2,300, then there is not that much cash flow. It's not going to the enterprise value, so then there would be downside risk. But okay, gold has gone up. That's very good, and that will help Cerrado Gold to repay the debt. Now, okay, so you understand already what this means. It depends a lot on the gold price. It could be higher than enterprise value or lower than enterprise value. If we go back to 2,100 gold, look at what happens, then there's not enough cash flow to repay the debt. And then this here will go down. By how much? By 30 million. Okay, from here to here is minus 30 million. How does this go down by 30 million? It means that the market cap will go to zero. Okay, because we only have 20 million market cap. And if this goes down 20 million, then it goes to zero. So this is a very dangerous company if gold goes down. So how does this look like? I already did my sensitivity analysis here. So this is my sensitivity analysis at 2000 gold, 3000 gold, and I have created the chart here. So this is Cerrado Gold. At the current gold price, there is upside. Yes, there is indeed upside. Let's say 100% upside. Depending on if the all-in sustaining cost is lower or higher. So that could fluctuate. We don't know. We don't know what the production is going to be, and that could fluctuate a lot because this is a low market cap company. So with a high NPV, that NPV can change a lot and change the upside. But as you can see here, if gold goes down, then at some point it will go to zero and to minus 100%. So what you don't want with Cerrado Gold is a lower gold price. That's very dangerous. But of course, I think gold will go up to 3,000, 4,000, and you can see there's super high leverage on Cerrado Gold because the market cap is so low. But would I buy this? I don't think so, because I think it's better to buy, for example, Mineros. This is the Mineros chart, and there's less leverage. Okay, there's less leverage, but at current gold price, it is the same upside. The downside is less. Here it can go to zero. Even if gold goes down, then minerals will still double. So from a risk reward perspective, it's better to buy a lower cost, lower debt company. Because even if gold goes down, you still have upside. If gold goes up, you have less upside. Oh, I agree. But sometimes you need to look at risk reward. Sometimes you need to be happy with a smaller upside with lower risk. Cerrado Gold, more upside if gold goes up, but more downside if gold goes down. And there's a very high leverage on that. If it just goes down 10%, if gold just goes down 10%, it can go to zero. From here to here, that's 10%. So really dangerous to be in Cerrado Gold. So you need to be absolutely sure that gold is going up to 3,000, 4,000. If that happens, then yes, Cerrado gold could be a double, triple, quadruple. Okay. So once and for all, we have talked about Cerrado gold, and now I can just refer you to this video. And I'll see you in the next one. Bye.